Hang Seng is up on your screen as well. That one is seeing cuts of 0.2%.
We're going to set policy to do what we have to do to get back to price stability. So we've been raising interest rates.
Bharti looking at Paytm for an acquisition or at least a strategic tie-up in the payments bank.
300 million metric million tons is what they've achieved. The implied ask rate for Q4 continues to remain quite steep, in line with the company's guidance of somewhere between 350 to 360 million metric tons.
Here's the first take on the index, not looking good. 50 points gone on the Nifty.
India got hit by events within India, and also the fact that China was seen to be the favorite starting November, December last year till Jan, Feb.
Q3 had a very high base, and that's why the growth rates were limited in the Q3 of this year.
Reports indicate that the company will be taking a 25% production cut in its export business.
Still down 120 points on the Nifty, the sensex down 350 points.
It's the right time for us to also rethink whether we need to see whether and what is the connection between interest rate and inflation.
They have announced an acquisition worth around $90 to $100 million. They will be buying Australia-based Main Pharma's US generic prescription portfolio for that amount.
Another day of weakness that we are seeing for the Indian markets. Nifty is down around 140 points.
You're with us here on Closing Bell. Last hour of trade. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, and joining me, as always, my colleagues Reema and Surabhi. Guys, hi.
Hi.
Prashant, hi, Reema.
Absolutely, and we actually start with some unfortunate news, right? In terms of the passing away of Ashwini Gujral, someone who I think most people who watched CNBC over the last 10-15 years perhaps would recognize as a fixture, and somebody who's kind of been there guiding investors, guiding traders, and of course, I mean, absolutely clear-cut in his views. So, I mean, that's absolutely came as a big shocker, just 52 years of age. And, so just wanted to kind of put that out straight up for our viewers. That Mr. Gujral is no more, and of course our condolences to his friends, family, followers, everyone. Of course, I mean, went out of sight for the last couple of years, but was a fixture, as far back as I can think.
Oh yes, absolutely. A lot of memories, a lot of great conversations, and some very enlightening ones, some very electrifying ones. So this really is when you've known someone for so long professionally, having conversed with them on a daily basis. This sort of does hit you to an extent. Absolutely.
Leaves
so prayers
behind a
with
very
the
big void, right? The person passes on, but the memories live on, right? And that's what we're going to take away from this.
Absolutely. So let's quickly run you through, how things are set up in the markets as well right now before we go any further. So earlier today, the Nifty, by the way, this is a market of two halves, two or three halves, I should say, because the Nifty is down and out. The Bank Nifty is up, and the broader markets are down and out as well. So let's just start with the Nifty. The Nifty broke the budget day low, the 1st of Feb low of 17,353 earlier in the day. We are, by the way, under that level still with the 0.75% cut. The low today comes in at just under 17,300, 17,299 is the low. And I put this level out in the morning as well. The 20-month moving average for the Nifty is at 17,280. So we didn't quite get to it, just 20 points, saved by about 15, 20 points or so. But that's the other big level, right? The budget day low, and then you got the 20-month moving average, which comes into focus. Marked outperformance by banks. I mean, I looked at the private bank index, the public sector bank index, both are up 0.75%, and the Bank Nifty itself is up 0.75%. Bank Nifty, after underperforming all of last week, today at least is outperforming. It did not break the low of 39,600. Which we highlighted. That is good. On the upside for the Nifty Bank, the resistance has come in at 4397, 4400 and 4700 roughly. Those are the broad numbers. This is nothing but the retracement. These are Fibonacci retracement levels of the move from the 30th of January to the high of the 16th of February. So Jan to Feb move, the 38% and the 50% retracement of those numbers, 44 and 4700 on the Nifty Bank. And lastly, the Wall Street handover on Friday was pretty ugly. But right now, most of Europe is not doing too bad. I mean, most of European equity markets are higher. Asian markets mostly ended in the red, but nothing alarming or anything of that sort. And the fact that banks are pulling one way and the rest of the market is pulling the other way, I mean, does at the margin give us hope, especially because the Nifty and the Bank Nifty has sold off so aggressively in 5 or 6 sessions straight. So a pullback for the broader market as well, it's entirely possible. But as we've been saying, let the market tell you, give you that signal that it wants to do that. It wants to base out and perhaps move up a little bit. Guys, hi.
Hi, but the sector of the day is clearly the banking stocks, right? The Nifty Bank is up close to about 7.8%. All the top Nifty gainers today are actually in the banking and the financial space. So the top gainer is Kotak Mahindra Bank. That's up 1.6%, followed by ICICI Bank, a 1.5% rally on that. And then you've got State Bank of India at 1.3%. And you go lower down and you would still see some financial names. You've got an HDFC Life, so an insurance name there. You've got HDFC Limited as well. So it's been all about the banks, and they're also reversing a long streak of underperformance. So year to date, the Nifty Bank is down 6.5%. In comparison, you've got the IT index, which is up 4.5%. So the Nifty Bank had underperformed the other, big sector, sectoral heavyweight, IT by nearly 10%. And now some of that appears to be reversing. A couple of the other sectors which are weighing on the markets today, metals, IT, of course, IT is down close to about 2%. And you've also got the auto names down close to about 2%. What are you tracking?
Since you mentioned auto, Bajaj Auto, let's just pull that one up. That's a story worth highlighting. Because you know that there are production cuts the company is taking at its export facilities because of the condition in the export markets like Nigeria. Right from the morning, that stock has been, sort of falling off and no buyers in sight. But I was looking at some more moves in the mid-cap space. As Prashant mentioned, overall, the breadth is still very, very negative. The mid-cap index is down quite a bit. Individually, there's interesting price traction. On one hand, there's a UFlex. Check UFlex, 16% gone on that stock today. There's obviously Memphis. That's where there is news about possibly a slower fourth quarter ahead. That's what some of the brokerages are talking about. On the other hand, look at a macro tech developers. I mean, Lodha is flying away 16% as we speak. So beneath the surface, you have some very interesting movers and shakers. But otherwise, it's pretty downbeat. Prashant, just a point, I completely agree with you. Europe is right now looking so much better than how we started the day. But interestingly enough, the 10-year US yield is also surging. Let's pull up the US 10-year. It's now 3.95. So it's not like yields have cooled off. We'll see what happens in the action tonight. But interesting, there's a bit of a relief rally across European screens. US futures are higher, but so is the yield. So let's see how this plays out. But I guess the commentary on interest rates, inflation rates, I guess that's not off the table, at least as of now.
Absolutely. Absolutely.
Okay, let's tell our viewers then what we've lined up on the hour now. This is Closing Bell. Big auto players like Bajaj Auto, Tata Motors skid into the red. What's ailing these stocks? Details lined up on the show. IT player Emphasis slips in trade after Citi initiates a sell call, and the company's management tells Citi that softness in mortgage business is likely to continue into Q4. As usual, we'll have a conversation on the sectors and themes to bet on with our alpha manager for the day, Vinay Jai Singh of JM Financial.
Okay, all right. So that's the lineup here in terms of what's coming up on the show. How should you position yourself in the last hour of trade? Mitesh Thakur is with us of earningswave.com. Mitesh, good to have you with us here. Thank you very much. How are you looking at the market, Mitesh? I mean, and big divergence, isn't it, between what the Nifty is doing and what the banks are doing?
Yeah, good afternoon, Prashant. One, I think, we talked about the hitting of testing of 200 average. I think we've just done that today and ambling around that. So we've taken a good part of the short positions off, book profits, and today's high becomes a trading stop loss. Even for stocks, I think, the individual stock side, I think today's high is what we'll trail the stop loss at. The bank Nifty is actually surprising. To be very honest, I think, I didn't expect this kind of strength from the bank Nifty, but I think this just some short covering in the banks, while IT is a sector which is seeing some profit. So I think just that rotation continues. But otherwise, no signs of reversal in the bank Nifty as yet. We would look at possibly, some kind of reversal once we see the bank Nifty get past 40,650 levels or thereabouts. So I think that's the pivot which I'm following on the upside. Once we start getting past that, then I think we'll look at a bank Nifty reversal, and that could then lead to a stronger rebound in the Nifty. Given the fact that we are trading around the 200 average, I think we are open to that possibility of a stronger rebound, which is what has been missing in the last 4 to 5 to 6 sessions. So in that sense, I think trading slightly light. On the stock side, though, I think I still have some sell calls. MRF is breaking down the key support levels of 86,000. So keep that as the stop loss. Look for targets of around 83,900, 83,800 on the downside, maybe even lower to begin with. And the other one is Godrej Consumer. That's something which has broken down today with good volume. So here recommending a sell with a stop just above levels of 924 for targets of 18.
Okay, got that, Mitesh. Thanks very much for the calls. We'll come back to you in another half an hour and see how market is shaping up. For the time being, let's focus on some of these auto stocks. And auto's really fallen out of favor today. Two stocks in particular, Bajaj Auto and Tata Motors. So let's find out what the driving factors are, so to speak. Sonia is joining in for that. Sonia, hi. So Bajaj, I guess, right from the word go, right? The whole idea of production cuts, the market just hates the sound of that.
Oh, absolutely. And I think it's the export element in both these stocks. Bajaj Auto and Tata Motors have an export presence, and it looks like there is quite a bit of pressure there. Let me start with Bajaj Auto. As reports have been indicating, through the day we've spoken about how there could be a steep production cut by Bajaj Auto to the extent of 25% in its export business. Now, this is important because the business in any case has been under pressure for a while, and a further production cut would mean lower sales for Bajaj Auto going forward. This is particularly due to the issues in Nigeria with the devaluation of the currency. Egypt has been under pressure as well. We reached out to the management of Bajaj Auto. They said that this is an ongoing issue, and not just with Bajaj Auto, with other two-wheeler exporters as well, and it's been ongoing for the last few months. In fact, in the next few days, you'll get numbers in terms of the wholesale sales, and Nomura has put out a note where they are expecting the sales to fall by 45% year on year, only for the export piece is what I'm talking about, at 112,000 units. They say overall the two-wheeler industry will be under pressure, and the two-wheeler volumes are still down 30% from the peak that we saw in June of 2018. Now, for Tata Motors, there is also the domestic piece which is working quite well. So on one hand, exports, JLR could be under a bit of pressure, but in the domestic market, the expectation is that commercial vehicle sales will look good in this month, because come April, there are some new emission norms which are coming through, and the prices of CVs will go up by about 3 to 4%. So there's some pre-buying that you're seeing in the commercial vehicle space. Nomura expects the industry volumes to be good. However, overall, as I said at the start, it is the export-facing companies that continue to be under pressure, hence Bajaj Auto is down 5%.
Thank you very much for that. Let's invite Hemang Jani of Motilal Oswal Financial Services into the discussion and on the show now. Hemang, thank you very much for joining in. The first question is on Tata Motors. Now, Motilal Oswal is bullish on Tata Motors. I believe your target price is close to 525. So there is a lot of upside from here on. Given what Sonia had to say, the concerns about exports slowing down, your thoughts on Tata Motors and how would you view your buy call?
So good afternoon, Rima. I think Tata Motor has seen a relatively better performance in the past 2 to 3 months. And if you look at the data points, the monthly numbers, particularly from China, Eurozone, have been better. Even on the margin front, the situation is looking much better. So, despite Tata Motors being a little difficult stock to track, the sense that we are getting is that things are looking much better. Even on the domestic side, if you look at their passenger vehicles and CV part, it's doing relatively better. So we think that at this point, the company should do much better. Yes, the recent data points, particularly from US, Eurozone, are the challenges, but we think that overall, from a risk reward point of view, Tata Motor is better placed in the auto sector at this point.
And Bajaj Auto and the fact that they have to slash down production?
So clearly, two-wheeler has been a difficult sector last almost 1 year. We've seen some positive data points in Feb, but when we look at Bajaj Auto, 45% of their revenues is export-driven, and given the challenges in the African nation, I think we will have some issue in the near term, at least for let's say about 3 to 6 months. So clearly, this is a sector which has been a big avoid for us. I think from an auto OEM perspective, we prefer Ashok Leyland and Maruti. And from the ancillary perspective, we like Motherson and Bharat Forge at this point.
Okay, got that. Hemang, do you track macro tech developers, Lodha? I mean, there is some brokerage commentary out there today, a very favorable commentary saying that if you're looking at longer-term valuations, then the valuations now aren't as close to the earlier peak. I mean, the past cycle and the peak that we saw over there. That's one view on the street. But your thoughts? It's quite a stunner today, the move almost 15%.
So Surbhi, yes, today's move is big stunner. But when you look at the stock from let's say last about a month perspective, I think the stock has lost almost about 30-35%. And this is much more than most of the other real estate stocks. And our view on Lodha in particular and the real estate sector has been positive. If you look at the new registrations, the numbers, the commentary, that has been quite good. I think the only worrying point could be that if the interest rates continue to remain higher, this entire momentum can actually slow down, and that is what is actually causing some sort of profit booking there. We like Lodha. I think there is a massive institutional selling, which is why the stock is down. We haven't really come across any negative news flow or data points on that. So positive bias on Lodha as such.
Even with this massive rise that we're seeing, it's basically back to, it's kind of recouped Friday's losses and a little bit more. That's about it. Basically, somewhere in the middle of the Thursday's bar is where Lodha has gotten to. And of course, it fell from 1150 kind of levels all the way down to, around 700. So that was a very large correction, as Hemang was pointing out. Now, Zee is correcting sharply down by 6-7%. And we learned from sources that exchanges are unlikely to take a firm view on the re-inclusion of the stock back into the F&O segment. Yash is here with what he's picking up. Yash, over to you.
Well, Prashant, I'll start with a quick context. February 23rd was when NCLT admitted Zee Entertainment under IBC proceedings. The very next day, NSE came out with a statement saying that they will exclude Zee Entertainment from the F&O segment, put more restrictions on the counter, and they had cited, shortlisting of Zee Entertainment under the IBC process. Now, of course, there were questions in the market on after NCLT putting a stay on NCLT's or IBC order, would Zee Entertainment be re-included in the F&O segment? Here, what we've been given to understand from our sources is that exchanges are unlikely to take a view immediately on including Zee Entertainment back into the F&O segment. Exchanges, essentially, the note which they've taken is that NCLT has just put a stay on the NCLT proceedings under the IBC process, and it's not essentially a disposing of the entire matter, is what exchanges at this moment seem to be considering. Also, some views from market regulator SEBI are sought, since it's a new situation in terms of what is to be done in a similar situation. Of course, with this particular clause of staying out of the F&O segment, there are various restrictions which come on the stock. No fresh monthly contracts post expiration of Feb 2023 contracts. Existing March and April 2023 contracts will continue. Also, margin of 100% on all existing contracts. So all these restrictions are expected to continue on the stock till exchanges take a proper view on it.
All right, Yash, thanks very much for that. Now, Hemang, what exchanges may do, we have no idea. But is this an issue which you think will linger for long, or, I mean, as many believe that if this does start to endanger the merger with Sony, the matter, the quickest way is to pay up, settle the matter, and move on. What's your sense, Hemang? Yeah.
Absolutely, Prashant. I think just for about 83 crore matter, now the loss in the market cap has been more than about 30%. And that too after, seeing a massive correction over last 12 months or so. So I think, Prashant, the point is not whether it is included back in F&O or no, but, because of the way things have panned out on the ad revenue front last quarter, now you have IPL for about a quarter, which will have another dent on the ad revenues, and this entire issue of NCLT and the F&O exclusion. So I think a lot of negative news around it. We think that the fall in the market cap is far more than what is justified. But because the merger process could get delayed and the ad revenue visibility is not looking that good for next quarter or so, I think the stock can remain subdued. But I think definitely for somebody who's looking at a 1 or 2 year perspective, this kind of a steep correction provides a good entry point also.
Even if there is a possibility that the deal doesn't go through, you would still say it's worth the risk, worth the bet?
I think, Rima, the possibility of the deal not going through is very low at this point of time. I think this matter is more of a technical matter where some settlement can be reached out since the amount involved is not too big. So I do not think that the merger itself will be endangered because of this.
Got it. Do stay on, Hemang. Need to slip into a very short break. We'll come back with more on the markets. We'll also invite Vinay Jaising of GM. 17,350 on the Nifty. We're down more than 100 points on the benchmark index. That makes us in the red, declining for the 7th consecutive day. And this at a time when most of the European markets are currently up close to about 1%. That's the CAC, DAX and the FTSE. This year, you've actually seen a lot of buying in new age tech companies. So PB Fintech, year to date, the rally is nearly 24%. Paytm, another stock which is up 2.5% today on separate news, but Paytm has rallied 20% this year. So these new age tech companies, after the big drubbing that they got last year, have come back in favor and started seeing some buying at the lower levels. But on the losing side, it's technology, and a stock which has come under pressure is Mphasis. Now, today Citi is reported on Mphasis. This is post their meeting with the CFO of Mphasis, and their key takeaway is that the mortgage business, which has been weak for Mphasis, is likely to stay muted even in Q4. Now, in mortgage, the business which is particularly affected is the origination, the new mortgage deals, and that only contributes about 2% to their overall revenues, but that is likely to remain muted. Another concern that Citi flagged off is that though the deal pipeline is very strong, it's diversified, there are large deals in the pipeline, the sales conversion has been a bit slow. Converting those deals into actual revenues is taking a little bit more time. The conversation with Mphasis and Citi also went on to say that the company is going to be holding on to their margin guidance. They are very active on the M&A front, but Citi, on the back of some concerns about the Q4 outlook because mortgage is still not showing signs of a recovery, has a sell call on Mphasis, and they also believe valuations at 22 times forward multiple could be on the higher side. Hemang, thoughts on Mphasis, particularly in the IT pack?
So, Rima, I think given the recent macro developments in US and UK, and the fact that you will have some sort of a slowdown as indicated by the management in their cautious note, definitely means that there is going to be some sort of a correction. Also, we have to be mindful of the fact that some of the mid-cap IT companies had done extremely well. Persistent, Coforge, to some extent, Mphasis before this correction, they did relatively better. So I think there is a case of some sort of a correction over there. And overall, we like the IT large caps compared to mid caps, where we see more stability and a valuation comfort also. And within the mid cap, we like something like a Cyient and Zensar.
Cyient and Zensar. Got that. Thanks very much. Good speaking with you, and appreciate you joining in with that perspective, Hemang. It's always a pleasure. Well, the market's trying to come back, isn't it? I mean, we're down less than 100 points with the banks doing what they're doing, 17,372. Vinay Jaising is Managing Director, Portfolio Management Services at JM Financial Services. Vinay, good to have you with us here. Thank you very much for your time. So just talk to us about whether enough damage has been inflicted or there is more to come, Vinay. I think the last you joined us, you were indeed a bit cautious.
Right. Thank you for this opportunity. It's interesting. Every week we are getting some data which is moving the direction some other way. The current data we've got in the last 1 to 2 weeks have been red hot data coming in terms of labor markets in US, which very simply implies that the US government will have to do something more than earlier as far as interest rates are concerned. As a result of which, if earlier the expectation of Fed stopping at 5% was the peak interest rate, now 5.5 to 6% has become a possibility which people cannot forget. Also, the inflation numbers have been on core PCE a little bit more than expectation at about 5.4% as against 5% last month. That too is not being taken well by the market. So I think there are these two issues which is leading to the global markets, which had moved up as much as 10% till a couple of weeks ago, correcting. And you've seen a bit of pain in the overall markets. India still is one of the worst performing markets this year, down 6-7% as against the global markets, which are probably up by 2-3%. So we are closer to the end for India as far as fall is concerned. But liquidity remains a big concern for us as far as the overall Indian market is concerned. Let's not forget FIs have taken out as much as $3.5 billion just this year out of the markets.
That's well put, Vinay. Hi, good afternoon, Surabhi here. And I was just coming to that point. I mean, you run a PMS business. You tell us, what is the HNI money doing? Because you were talking rates. And as we speak today, the Indian, forget the US, the Indian benchmark yield is at a 3-month high. We're at 7.45%. So, I mean, I'm just guessing, for a lot of the HNIs with surplus cash, I guess fixed income and some of these simpler investing options perhaps are making a very compelling case. So, harder questions for equity managers?
So, as far as equity managers are concerned, as the way we look at it is the net cash we have in a portfolio could be as much as 8 to 10%. Because remember, there are ideas, which move down, but there are also, the banks which have done very well in the quarterly results which have come out. You've seen a 45% plus year-on-year growth in the entire bank index earnings. And that is still to come up into the bank index or, the stocks which we like HDFC Limited, HDFC Bank. And we're very positive on earnings of them. So there are good quality names which we think will buckle the trend. But what we're talking about as far as liquidity is concerned is just a 1-month trade. Let me just reverse the question and, look at what we were looking at in the month of December. In the month of December end, we were looking at M2 for the world going to zero. And then all of a sudden, China opened up and you saw probably $6 to $7 trillion, from November, December, Jan coming into the global markets. Just in the month of January, I think we saw $3.5 trillion. And you saw the entire market move up. So technically, liquidity is something you should not think of, as far as you are a long-term investor. And, sometimes keeping cash on hand of 10% would help. And I think these are times like today. Wherein if you had the cash, you can get some stocks to move up. Just one more comment, 1 year forward when you were to go, you would be discounting F25 numbers. Therein the market would start all of a sudden looking at something close to 17 times multiple. So I think the risk reward ratio very clearly now is going more with the reward coming for the Indian investor as compared to the risk of probably a 5 to 7% market downside.
Vinay, hi, afternoon. Last year was all about value doing well versus growth. Now in this year, where do you think that argument stands? Do you think value will continue to outperform, or is growth going to make a comeback? How would you allocate your portfolio?
So I think you need to marry the two, right? Growth is reasonable. Valuation is what people will go back to what they were speaking for the last couple of decades coming back into the picture. You've seen the problem with, IPOs of fresh, good equities coming into the picture, wherein there were no profitability correct substantially in the market. So you've seen globally, hot assets were being, followed by hot money. With liquidity going away, valuation is something which needs to be very, very strong. But if you can get growth with it, you have a win-win situation. And I think you've got lots of assets which could give you best of both. I'll give you one example. In specialty chemical, you've got Archean Petrochemical, wherein the earnings, our analyst tells us, is going north of 35-40% for not 1 year, but 2 to 3 years. So you can have assets which will have good earnings visibility and relatively strong balance sheets also come into the picture. And it's under 15 times 1 year forward earnings.
Archean. Oh, Archean. Okay, fair enough. The recent listing, right?
That is right.
Okay. What else, Vinay? Now that you whet our appetite, talk about a few other names where you think,
Sure.
Yeah, go on.
Sure. So, see, as far as we are concerned, we are looking at interest rates being higher for longer. So we like the banking sector. In the banking sector, what better than the biggest, which is HDFC Bank? You have HDFC Limited, wherein, you're getting a little bit more alpha compared to banks. So that's one of our favorites. If you look at the cement sector, we think the coal prices coming down have been very good for the sector. And you will see a good quarter or good couple of months also of demand with the capex cycle moving up. As far as the budget is concerned, that's what, the budget was all about. So we like Ultratech Cement out there. Also in the FMCG space, we've seen a lot of correction happen in companies like Devyani. So we like companies like Devyani as well, as long as the QSR chain is increasing. They're growing their, KFCs as well as the Costa Coffees. People are starting moving out a lot more. We know that there is inflation pressure on cheese, which is a short-term pain for QSRs, but that would go away. And we pretty much like the specialty chemical sector. You mentioned Archean, but we also like Gujarat as well as Tatva Chintan. So there are lots of stocks we like in today's market. Most of these companies have had very good results also in the quarter, which came back, unlike the Indian market results overall, which if you take out the financials, you're probably down 7 to 10%.
Okay. All right, Vinay, we'll leave it there. Good speaking with you, and appreciate you joining in with some of that perspective. So interesting list of names there. Tatva Chintan, Gujarat Fluoro, Devyani Foods, and of course some of the larger ones as well. Archean Chemicals is another one, and of course Ultratech, HDFC Bank, etc. are some of the names highlighted by Vinay at JM Financial. We're down 93, 95 points on the Nifty, 17,372. Incrementally, not very much. So attempted a recovery, but firmly getting sold into. Market breadth is still over 3:1 in favor of declines. So no real big movement in the advanced decline ratio at this stage. It's been steady and absolutely firm with 3:1 declines to advances. We'll take a break here, but we'll just kind of, all right, I think what we'll do is we'll go back and address that somber piece of news that we got earlier. We're deeply saddened by the passing of stock markets commentator Ashwini Gujral. CNBC-TV18 expresses its condolences to his family. So we're now joined by Sudarshan Sukhani, someone who's kind of worked with Ashwini, been on the program on the air for many, many years, almost a team. Sudarshan, good to have you with us here. It's extremely saddening, shocking, the piece of information for us, and I'm assuming for you as well when we got it. Any thoughts you might want to offer?
Yes, it's actually with a lot of deep regret that I have to sit here and condole the passing away of my very close friend Ashwini Gujral. We were very close. He was a derivatives trader. He was an excellent technical analyst, a market forecaster, and all in all, a remarkable person. His knowledge of the markets was of the highest level. He forecast with uncanny accuracy many future events, including the fact that the COVID-19 scenario would lead to a bear market, and he was right. We were very close. His absence will be a major loss to the analyst and trading community. All my sympathies go to his family. May God give them strength. And really, Ram Ram.
Yes, Sudarshan, absolutely. Our prayers and thoughts with the family as well. I personally remember Ashwini as a very, very spirited guest. Always, a pleasure to have him on our shows. He would always say things in the most interesting manner, in a very clear-cut style and manner as well. Sudarshan, maybe some, final thoughts. It is obviously stressful, the life of a trader or a technical analyst. As you look back at times, you look back at your relationship with Ashwini and others, any final thoughts or a piece of advice that you'd like to give to people out there who are working in this very, very fast-paced environment?
Well, my final thoughts would be to keep the stress level low and do only as much as you can. That's a general piece of advice, but especially for traders like me and Ashwini and so many others who are listening, because the business is very stressful. So just accept what you can. And the best way to do this is to say, let the markets do what they want. We'll just follow them.
Wise words, Sudarshan. Thank you very much for that. We need to slip into a very short break. We'll come back and talk more about the markets.
Today's trading action is the actual, resounding strength of the banks, and that is why you're seeing that reversal play out. The reason the Nifty has not collapsed, it's literally come back from the brink. It is all because of the bank Nifty, 1% higher, and quite a few of the big names, ICICI Bank, SBI, they're really pulling up there and keeping the gains intact. Well, with that, let's find out what the chatter is like on the street out there. It's time for our special segment, D Street Chatter. Nimesh is joining in with the latest. Nimesh, in the morning, it was just like the ground is, caving in. And thanks to these banks, at least we're seeing some sort of a pullback. What's the word you picked up out there?
Hi, Surabhi. You rightly pointed out about Bank Nifty supporting the markets, but surprisingly, for the Bank Nifty today, the feedback was that there is selling pressure from the larger FIs. So, little confusion as well as to why and as what led to this big move in the Nifty banks today. But overall, on the markets, the pressure continues. We've broken some crucial support levels, so there is no technical support as well for the markets to rebound from these levels. That's been a key pressure, and there has been a lot of margin calls getting hit for a lot of investors and HNIs as well. So I spoke about banks, despite selling pressure, moving up in today's trade. But the other sector which is under pressure is the metal names. So most of the metal stocks are under pressure, and there is genuine selling as well in those names today as well. So the other important aspect is the cash volume has picked up on the first day of the new week. Compared to last week, the volumes are slightly on the better side, and that's been the feedback as well. That because of margin requirements getting eased a little bit, the volumes have picked up, and there is some bit of traction in the broader markets. But overall, from a Nifty point of view, the pressure continues. I guess today the only positive part is, despite sell flows, the bank Nifty is sitting in the green.
Nimish, thanks for that. In terms of specific stocks where you're hearing chatter about, what's on your list today?
Hi Prashant. So in terms of individual names, the first stock on my list today is Macroeconomic Developers, which is called Loda. That stock is up, buzzing in trade, up last 12% last when I checked, and in good volumes as well. Remember, the stock has fallen sharply in the last few weeks from a high of from a QIP price. It was down 30-odd%. I believe today it looks like some selling pressure from a leading fund was largely getting over, and that got absorbed by some domestic funds, and hence I believe that stock is reacting in trade. In fact, I understand the management is also meeting some large clients in the next couple of days. So that's the reason why that stock is buzzing in trade. So that's the first one. The second stock is NCC, Nagarjuna Constructions. After a long time, some bit of buying interest seems to be back in this particular stock. Buy flows at a leading FIDs for the second consecutive day. So the delivery volumes are expected to be quite high in NCC in today's trade. And the last stock is Aarti Industries. Again, this one stock has been consolidating after the recent underperformance, and now at these levels, almost at 52-week lows, there is some bit of accumulation happening at leading FIDs. So looks like some bit of FI interest is back in Aarti Industries after a very long time.
Nimesh, thank you very much for that interesting list of stock. As always, let's talk about the markets. Nifty's at 17,400, so now trading above the budget day low and the 200-day moving average. Mitesh Thakkar is back with us for a few BTSD calls. Mitesh, it looks like we might just avoid closing below those key threshold levels. What is the trade that you would recommend on the index and individual stocks?
So, I was actually talking about cutting and taking profits on the short position on the index. I think on the stock side also we've slowly started taking short positions off and exploring some long ideas to balance it out, because again, as you rightly pointed out, the 200 averages come in handy. And let's not forget, today is the 8th red candle, which is the 8th lower close from opening of the day for the 8th consecutive session, and we are quite oversold and now trading at a 200 average support level. So good chance that there could be a throwback. With that kind of view, I think I have identified two BTSD calls. In fact, power grid is something which has come on the radar. That's BTSD or a buy with a stop at 216.5 for targets of 225. And the other stock is NTPC. That's a BTSD with a stop at 171 for targets of 175.
Okay, got that. Thanks, Mitesh, a lot for the calls. With that, let's take the conversation to Neeraj Diwan, Director at Quantum Securities, who's joining us on this leg of the show. Neeraj, thanks for joining in. I want to start by getting your take on Bajaj Auto. We've all been talking about this export issue and, the reason why they're having to take production cuts. Do you see this as just a passing disappointment for Bajaj Auto, or would it make you rethink perhaps your call on the stock?
Yeah, good afternoon. I think it has to, of course, they have their problem because of which the stock is correcting. But then the call has to be on the market. The markets are falling because of inflation fears, and inflation is so sticky and interest rates are still going up. If you have to keep that background in mind, then something like autos, you need to wait and see. When you see some reversal in the stance, which our central bank and the global central bankers are taking. So you need to take that call as far as interest rate sensors are concerned, and Bajaj Auto will fall in that category. But definitely, if you see the last quarter result, Bajaj Auto came out with a decent set of results. So at some price, definitely it's a buy. But I would rather wait to see some more clarity as far as the interest rate scenario is concerned.
Neeraj, any stocks have hit attractive levels given the correction that we've seen? Any stocks that you would recommend a buy today?
Yeah, actually, initially the market started falling because the Bank Nifty cracked a lot. So Bank Nifty is seeing some buying today. So some of the banks like ICICI Bank, State Bank, you've seen some buying happening there. So I think the larger bank, the stronger bank, whether it's HDFC Twins or whether it's ICICI, State Bank of India, I think these are the ones which I think that there is definitely some momentum which may continue. And valuation-wise also they've corrected a lot. Until now, the credit growth is still decent. We've not seen a crack in the credit growth. So I think these are the ones which among the BFSI space. And besides this, I think the infrastructure companies, which are very strong the books in last quarter, are normally the best for them. So in the infrastructure space also, something like L&T or other infrastructure companies like Nimesh was mentioning about NCC. So I think these are the kind of stock which I feel that corrected a lot, and they still have sitting on strong order books, and execution in the last quarter should be very good. So I think these can also be looked at.
Okay. All right, Neeraj, stay on. I think we have to take a quick break on that note. We have about 10 minutes to go before the market closes out. And at least for the time being, the headline is that the indices are off the lowest levels of the day. We'll take a break, come back.
Just 60 points lower. We are at 17,400. Neeraj, this is a broader question. I mean, the Nifty has been falling for the last more than a week or so, right? And sharp cuts at that. I think in 6 or 7 days, the Nifty has lost 750 points. Today, we've come to an important level, the budget day low, the 1st of Feb low, and we are around there. What is your sense? I mean, what happens from here? Will we see this level being respected, maybe a little bit of drift higher, or there is a big break from here down? I mean, the latter is the lesser expected of the move. I mean, I'm assuming if you do a poll, most would expect that from here things stabilize a little bit. But what's your sense?
Yeah, the kind of fall we've seen in the last few days, definitely Nifty looking oversold. So there can be some bounce backs from these levels. But I don't think the bounce backs will sustain till you get some news flow which supports it. So news flow has to be something on the inflation front, and the way central bankers are looking at, further interest rate hikes or no interest rate hike. But I think Nifty may stay in the range. I think today's level plus minus 100 points should get respected. And from those levels, even on the upside, I don't think market to really go above 70,700, 800 kind of level. But it can stay in the range for some time till you get some news flow. And if the news flow is still not good for the market, then you can see that big crack that you're talking about. But if the news flow supports, then I think we should respect this level plus minus 100 points.
Neeraj, thoughts on real estate? They've had a good run. They are in an upcycle. But do you think interest rates now, which are at 9% if you have an EMI, will put a brakes to this rally?
There are two things. One is that the perception that because interest rates are going up, will hit the real estate sector. So I think because of that, you don't see any real buying coming into the realty stocks. You saw a stock like DLF also correcting. And you see most of the real estate stocks in the last couple of months have corrected a lot. But if you actually see what is happening on the ground, even DLF had a launch just, I think, a couple of weeks back. I think they sold 1,100 odd apartments in just 2 days, and each one of them was about 7.5 crore. Then it just took them 2 days to sell off the whole inventory there. So I think you're still not seeing any slowdown. So if again we come back to that thing that if going ahead, even from these levels, if inflation were to come down a bit, if there's some softening in the stance of RBI, domestically, I think then you will see a good momentum coming back also. So I think this is a period where the perception is that interest rates will go up, but on the if you go and see business-wise, I think they're still doing well.
Okay, Neeraj, we will leave it on that note for today. Thank you very much for joining in and giving us your perspective on the market. What an interesting day. Prashant, if I remember, the brief minutes from technical analysis class I once did, today's pattern, if you're looking at a candlestick chart, is what is referred to as a spinning top, because you've got, from the open, from the high to the low, there's this big line. but the open and the close are actually pretty close together. So we're going to be going home with a cut of just about 60 odd points, which is looking much better than before. Typically, spinning tops are indicators of maybe even a trend reversal, but that's just one indicator. Technical experts will, of course, tell you a lot more. But for today, what we have on the screen is a bank nifty, which is pretty much the hero from the bulls' perspective, with a 1% gain. So on the gaining side, you have all these names: ICICI Bank, Kotak, SBI lined up. HDFC Bank also up about 0.5%. IndusInd Bank, the manner in which the bank rally, with every single stock participating, the way it has happened, is something that is nothing short of remarkable, not something that you see every day. But that's the banks on the upside. And then, folks, it's the rest of the market.
Absolutely, Surabhi. So, Adani Enterprises is the large cap cuts, right? Adani Enterprises, big loss, 9%. Bajaj Auto, of course, we've been talking about it all day. UPL, Tata Steel, Infosys, Aisha. So across the board, on the large caps at least, there were cuts. And I think broader markets is the more painful of the story, because the Nifty was down only 60 points, and you had banks which kind of held up things there. But in the broader space, I mean, 3:1, more than 3:1 in terms of declines to advances, Reema.
Last week, if you remember, the banks had actually relatively outperformed, but today that's reversed. Today, the mid-cap, sorry, not banks, the mid-caps. The mid-caps today are relatively underperforming. The mid-cap index is down 0.7% with the advanced decline ratio, having one stock in the green for four in the red. The big losers, Uflex, that's down 16%. There was news about an income tax raid, so that weighed on the stock. Zee Entertainment, still no clarity on what the exchanges are going to do. So Zee Entertainment ends down with a cut of 6.5%, adding to the losses that it had last week. A couple of the other Adani Group companies like Wilmar, Adani Power, locked in a lower circuit of nearly 5%. On the gaining side, Electra Green Tech higher for the second day in a row. Remember last week it had a tie-up, a partnership with Reliance for green hydrogen buses. So Electra Green Tech sees buying for the second day in a row. Macrotech Developers reverses Friday's loss, ends with a gain of nearly 10-odd%. And then you had a couple of the other financial names outside of the index, like Equitas Small Finance Bank, also seeing strong gains. The Nifty bell has gone, and we end above 17,400, a cut of 56 points. So in the red for the 7th consecutive session, but well off the session lows. The low on the Nifty today was 17,300. So from the day's low, we've managed to recover more than 100 points, and we've also closed above key technical thresholds, the 200-day moving average and the budget day lows. So that the bulls will take with both hands. Banks, as we've been saying, outperformed today, with the Nifty Bank gaining 450 points. Get into a break on that note from the entire team. Thank you for watching. On the other side, we've got excerpts from our conversation with financial sector.
One could have expected a knee-jerk reaction. No, it was not done. Liquidity was not tightened, it was kept easy. And you have the results to see. Look at it today. I would think that the central bank continue to do what it had done. Watch carefully, and that's what it is doing, and not necessarily try to do what the West may or may not be doing to find our own solution. As far as we are concerned, I just want to make another point. I think I'm getting increasingly disturbed by the fact that we have probably no reliable data good to go on. This is the policymakers, the regulator, the monetary policy. And it's coming out now, particularly, let us say, in terms of CPI now. And I'm sure the same will be in terms of other indicators. Question that comes to my mind is, are we measuring right? And I think we now need to measure right, because we are no longer a small economy. And I'm looking at our country going from 3.5 trillion to 7 trillion. And this is something that we need to fix now in terms of measurement, so that policy then can work with numbers which they are comfortable with. I think this is the reason I would think we see some debate in the MPC.
So important point, and I think this is a reiteration of what you've said previously as well. You believe that there is a disconnect, and that disconnect fundamentally in your assessment is on account of the fact that there is no reliable data, in your words, when we talk about inflation. But given where we find ourselves today and where that's led the MPC's deliberations, do you believe that we're likely to hit a pause, or given what at least the RBI members are saying, that we are perhaps likely to see further tightening?
I really don't want to make a call on it. I think that's something that the policymakers need to do. But I would think that one would need to look at CPI or other indicators a little more, with more focus, as it were, to understand whether this is something that we can take a decision on. Look at the system, as it were. There is a growth momentum. What is happening in that context? Take other, I would say, indicators that come our way in terms of dipsticks or any other measure that you could take to determine what is happening, and then take a decision. Because we do not want to end up in a situation where we raise interest rates and put an engine, the economic engine, which is now fine-tuned, put it out of gear. Getting it back in tune is going to take time.
Let me ask you about what we are seeing play out at this point in time with one of India's largest groups, and that is the Adani Group. Of course, what is happening as far as the stock markets is concerned is a separate story. What is the other side of the story is the group's ability now to go out there and do the kind of capex that was expected of them. There has been a retracing, there has been a sort of scaling back, a scaling down, if you will, across group companies at this point in time. To start with, I want to understand from you, what does the current crisis with the Adani Group stocks and the Adani Group mean from an economic point of view?
Yeah, I think, firstly, I don't want to talk about any specific group, Shireen. The market is functioning, the banks are functioning. The rest of it is, I do not really want to comment on. I will only say this in a larger context that, my 50 years plus of being in the banking business, 52 years to be precise, I don't think that any single group makes, or carves off the history of this nation. So I have, really speaking, no concern that overall India will continue on its path of progress at the pace we have outlined. That's all I want to say. And I don't see any loss of confidence in India consequent to these things, because I think the external world now recognizes that we have our own regulatory checks and balances, which will keep things in check. So
let me talk to you also about what we are seeing as far as the digital landscape is concerned. And I know that this is a space that you've been actively looking at and very confident of its growth. Whether we talk about UPI transactions, so on and so forth, we've seen the steady up move. Today, of course, reports about Paytm being in talks with another conglomerate for a potential deal. We understand that those talks haven't moved any further beyond the preliminary discussions. But how do you see the landscape shaping up? Do you believe that we are likely to see significant consolidation in the fintech space?
Yeah, Shireen, something interesting is happening in the fintech space. In the sense, the 60, 70,000, or maybe now 80,000 entrepreneurs that you have set out. I've gotten to see a few of them primarily in the financial services sector, and it's an amazing story. The platform value that they have created and what the platform can do is unbelievable. And the whole digital process and the impact of digitalization in India and its impact on the GDP will be probably the next exercise that economists should really work on. I was just looking at numbers from China the other day. From 5 years back, almost nothing. Today, last year when I saw it, it was contribution to GDP was 35%. This year, the number is 40%. So my belief is that 5 years from now, if you look at India, how much incremental contribution will be there from the digital economy is going to be, to me, a very exciting number. And that number, I would think, will not be less than 20%. I think it's in the 20-25% of the economy.
Okay, that is a conversation you're going to miss. We'll play the full thing out later. Well, as the global political and economic stress continues, IMF Managing Director, in an exclusive conversation with CNBC-TV18, says the world is likely to avoid a recession in 2023. She added India is a bright spot for the world economy. Listen in.
I want to congratulate India and the Ministry of Finance, Central Bank, for excellent organization of the meetings and for creating the atmosphere to build consensus. One Earth, one family, one future. And this is the spirit of the meetings. On debt restructuring, while there are still some disagreements, we now have a global sovereign debt roundtable with participation of all public and private creditors and of debtor countries. We just finished a session in which it is clear that there is commitment to bridge differences for the benefit of countries that depend on that. On the global financial architecture, a recognition that in the world we live that is more shock prone, we need each other, we have to overcome divisions, and despite of the fragmentation that we are facing, we can do that when there is political will.
There has been a lot of concern about the resilience of the global economy, the shocks that are in store. What did you warn G20 leaders about as far as the state of economy and what lies ahead?
The message we come with is we have found resilience over the last years, but we also recognize that 2023 is going to be a challenging year. Why? Because global growth is slowing down. At the same time, there are signs that it may be a turning point with growth bottoming out and inflation finally trimming down. We are most concerned about uncertainties. The war in Ukraine is a grave source of uncertainty, but so are other factors. In 2022, there were natural disasters on all continents. We started this year with the tragedy in Turkey and Syria. In this environment, we have to recognize that we have to learn to think of the unthinkable.
There is a lot of concerns about cryptocurrencies where you don't know who the issuer is. How should the G20 approach this issue? Everyone is waiting for some sort of global framework. Should we be moving towards a ban or regulations?
The IMF just days ago discussed this issue at our board, and what the conclusion is, first, crypto assets are not money. They cannot be accepted as a legal tender. Second, there has to be very strong push for regulation. And third, if regulation fails, so if we are slow to do it, then we should not take off the table banning those assets because they may create financial stability risk.
Right. And finally, will the world be able to avoid a recession this year?
It looks like we will avoid recession. There will be countries that are in negative territory, but global recession is less likely. Why? 3 reasons. One, we were surprised by the resilience of labor markets in many economies in the United States, in Europe, and the resilience of consumer spending. 2, we have been quite impressed by how quickly Europe managed to free itself from dependency on Russian oil and gas. Mother Nature helped. The winter was milder this year, but that allowed the European economies, many of them, to avoid recession. Not all of them, but many of them. And 3, China took a decision to open up, and that is creating a new impetus for growth in China. India is a bright spot on the global scene. Actually, India is contributing 15% of global growth this year. So thank you, India.
So finally, you're in India. Any recommendations for the Indian government to have a higher growth path?
What India can do more of is to continue on that path of structural reforms and to work even harder on more inclusiveness, and I see that this is being embraced by India.
And the war becomes the biggest threat. Everyone here has said this is the biggest threat to the global economy. Do you think that could create more supply shocks?
It is very uncertain how the war is going to evolve, and as long as this uncertainty is with us, it can make especially energy markets anxious. What we all pray is for peace, not only for the people of Ukraine that have suffered so much, but also for more calm in the world economy.
Now is Kunal Shah of Nirmal Bang Commodities. Kunal, hi, welcome to the show. And we've started yet another week with some declines, especially for the metals as a sector. So whether it has been about precious metals or base metals, it is trending on the negative side here. We'll start with gold and silver, where we are trading at 2023 lows now. So whatever gains we saw in the beginning of 2023, the all-time highs that we started January with, Feb actually has given all of those gains away. At these current levels for gold and silver, what would your strategy be for the month of March now?
Well, I think for the month of March, if you see, I don't see any meaningful upside coming in gold and silver going forward. The main reason for me to say that is the interest rate in US, in Europe, in UK are bound to move up further. And considering that when on one side there is interest rate hike going on other side, the liquidity withdrawal, which is taking place in Europe and in US. So in US, every month, $100 billion is being tapered off from the Fed's balance sheet, and almost $20 billion is being tapered from the European Central Bank balance sheet. So now we are gold is stuck between a scenario where the higher interest rate offered by the central banks are not causing investors to buy gold. But going forward, when the things become, when you start to see slowdown in US, when you start to see slowdown in Europe, then at that time, people will start buying gold right now. So I think it can break $1,800 and may well test $1,785 to $1,780 on COMEX. Silver may, break or test $20. And I think the trend is sell on rise. So for the month of March, we are not expecting any meaningful upside in bullions, and it would remain under pressure.
So while selling at these current levels also is a great idea, but Kunal, how would you see the current year ending then? I mean, is there any respite for the investors? Are these good levels for investors who are planning to hold it for a longer term advisable?
Oh, Manisha, I think for rest of the year, I'm very bullish going forward. So in the second half, gold prices are going to shoot up because at some point, there will be an inflection point and that will indicate that gold cannot go down beyond a point, because the more Fed does, the more ECB does, that is definitely going to cause slowdown in the housing market. That is definitely going to, right now, till now, from last 3 months, we are not seeing any impact because of the lag effect of the humongous stimulus which is being given by the Western central banks. But I think going forward in June, July, August, we will see, a slowdown in all these developed economy, or even if no slowdown, then the interest rate will not move up significantly. So at that time, people are going to buy gold. So we are already in a scenario where the geopolitical landscape of the world is clearly in a big doldrums right now. We don't know what is going to happen from the geopolitical point of view. So it's a strategic investment. There's no second thought on it. And I'm expecting, in the second half, gold to really move up and test again, kind of $1,950, $2,000 kind of level conservatively. So my outlook for gold continue to remain optimistic from the second half of the year.
Okay, so still a sell. Feb has seen a decline of anywhere around 6 to 12% for gold and silver, both of these commodities, and March pretty much could continue that way, but the year ending is expected to be on the positive side. Kunal, would you say the same about metals? Because just to give a sense or a context, in the month of Jan, we saw copper prices gain up by 12%, zinc was up 14%, aluminum up 10%. But take a look at Feb, and we've seen copper come off by 6%, aluminum down by 11%, zinc is off by 12%. So whatever gains that we saw in the month of Jan, whether it was about China reopening or inventory slide that we saw in the second half of 2022, that euphoria or that reason for buying also seems to be dissipating.
See, Manisha, we saw a humongous upside in metals, precious metals, and even base metals, mainly because of China opening up. So from July, August, September, October, November, December, 6 months, Chinese economy was virtually closed. And after that, we've seen a pent-up demand and all the metals shot up. But now, after the pent-up demand, the reality is the China is experiencing a slowdown in the real estate sector that is going to cause slowdown in the demand. And rest of the world, because of the tighter liquidity scenario, the growth is going down. So if the growth is struggling, if the global GDP growth is going down, how the metal prices are going to go up? So the story about, Chinese buying and all, it's not going to last. And eventually metals are going to suffer going forward. I am not optimistic about the outlook of metals. I'm expecting metals to correct even from the present levels, and at least another 8 to 10% cut. I would not be surprised. So I continue to remain pessimist about the outlook of base metals, and I'm not expecting any major rally to take place. sell on rice still looks very weak, Manisha.
What's your sense about the ferrous metals? Because they seem to have performed better than the non-ferrous metals. So whether you look at steel or iron ore, that one is still trading slightly marginally in the positive, even if.
Yes, the ferrous metal, the story is about the production cut. You see, China has started to come up and say that they are going to cut production of steel because of environmental issues and all. So that's the reason why ferrous metal is not going down. But I'm not expecting any major upside even in ferrous metal also, even from the domestic point of view and international point of view. So I expect prices to soften going forward, and I'm expecting at least 4 to 5% drop in steel prices globally.
All right. So while the month of Feb is closing negative for the industrial metals, all base metals and non-ferrous metals have seen a very sharp decline. That's exactly what Kunal is saying, that March also will not perhaps give you a reason to go long in many of those metal prices. 8 to 10% of a decline in many of these metals is what perhaps you can anticipate. Thank you, Kunal, so much for joining us. And with that, it's a wrap on Closing Bell. Thank you so much for watching.